Welcome back to the Live Your Best Life podcast, where we explore the people, experiences, and philosophies shaping how we create meaning in today's world. Today, we step into the future with Brad Neuman. He is the Senior Vice President and the Director of Market Strategy over at Alger. You've seen him on major networks, you've heard him on top stages, and together we'll dive into AI's rapid rise, its impact on markets, and what these shifts mean for our families and the way we live. Settle in. The future starts now. Welcome, Brad. We're excited to have you here on our LYBL podcast. Looking forward to getting some wisdom and insight, not only on the markets, but for our client family as well, to get to know a little bit about who you are working over at Alger. So we appreciate you being here with us today.
Yeah, great to be here.
Well, let's start personally. One is, what was your upbringing like, and what early experiences really shaped the way you think today?
Well, I grew up in New York City and Manhattan in the thick of it all. So it was a pretty competitive educational environment. I went to a school called Horace Mann in the Bronx and Riverdale, and it's a private school. And there was, I would say, a fair amount of academic pressure. Wasn't like many schools I hear about where the average is an A. Like, they made sure the average was, far below that. And there were some really smart people. In fact, there was this one class I recall, it was called Independent Interdisciplinary Seminar. And everybody kind of got to choose their own class that they were going to teach the rest of the class. It was like, say there were 20 students. So, there were people working on 20 different projects, and everybody had their own project that was distinct from everybody else, and they would teach that to the rest of the class. And there was one person who translated Faust into a language that it had not been translated into. There was this really smart mathematician who, funny enough, read a bunch of romance novels and converted them into an algorithm. They all followed some algorithm. Anyway, I was the only finance kid in the class. Back then, I was interested in markets and stuff like that, and I talked about kind of the ebb and flow of companies wanting to get bigger and M&A scaling up versus spinning off and getting smaller over time. And so back then, I was interested in markets and finance, and I think I always have been. My parents were interested, and my mother actually did some commodity trading and taught me about puts and calls I remember when I was 13. So there was never a doubt that I was going to do anything beside the markets, I would say, from the time I was a teenager.
Wow, very interesting. I bet that class was pretty interesting. I mean, just some of the things that you were just talking about, I was thinking to myself, I wouldn't have been in that class.
The school had some phenomenally smart folks in it, and the teachers were also really off the charts for high school. It was an interesting experience. Unfortunately, back then, I hadn't really developed a real love of learning, which I really did ultimately, but it kind of started senior year maybe. So most of high school was just a little over my head and just tough for me, but gradually I came to it.
That's awesome. Now, currently you're married with 3 children, correct?
Yeah, that's right.
Wow. How old are your kids?
8, 12, and 13, 3 girls. Married for 15, 16 years, going on 16. And I live in Connecticut.
4 girls in the house. That's a little tough.
Yeah, it's interesting. So it was not tough until they became teenagers.
I agree. We have 2 daughters, 1 son, and then we have a foster daughter. So my kids are 25, 23, second marriage. So my bonus daughter is 14. And then we decided at 52 to go ahead and foster. So I have a little 4-year-old at the house.
Oh, cute.
So three girls and 1 son. And I will tell you, definitely, the boys are a lot easier to raise than the girls, especially when they get to those high school years.
I can imagine. But I guess one of the nice things about having the 4-year-old is now you know how fast it goes and how much to cherish it, which is the nice thing about my 8-year-old. I'm holding on to everything I can hold on to.
Yes, you have to, for sure. Time goes by so fast, no doubt about it.
Yeah.
Now, some of the things that you enjoy, when getting to know you, finding out you like tennis, skiing, about boating as well, I believe, and then reading nonfiction.
Yep, yep, all those things are true. I'm kind of a tennis nut at this point. I got all my kids into playing tennis. They play it competitively and do these tournaments all over kind of the Northeast. So when I'm not playing tennis, I'm coaching it or watching it or doing something with respect to tennis. So that's a pretty big thing in my life. The skiing is not so big. I'm going skiing in a couple weeks, but it's just kind of really for vacation. I just like to be active on vacations rather than sitting on a beach. And yeah, the nonfiction is a big deal. I have not read a fiction book in um, 25 years probably. I just kind of always like to be learning something. Not that you can't learn from fiction, obviously you can, but I'd like to be learning a topic or studying something, and so I just gravitate towards nonfiction. I'm actually writing a nonfiction book now too. So on my desk is, I don't know, maybe 35 books that I'm reading that are all nonfiction. So
Oh wow! Now when's the book going to be done?
I don't know. That's a good question. Well, I think structurally it's actually pretty much done. It needs to be made longer, and I'm
Okay.
still now working on the distribution. Trying to find an agent, etc.
And are you able to say what it's about, or?
Kind of. It's about innovation and kind of
Okay.
the structure of innovation. So yeah, it's stuff that that I've been focused on for a while.
Very neat. Not a lot of people, could say that they actually written a book, so that's pretty awesome.
When it comes to fruition, it'll be cool. Seems
It,
like it's a long journey. I liken it to like sometimes I feel like I'm crossing the Atlantic Ocean in a ship, and like I'm like, what am I doing out here? But I'm in the middle of the ocean and I can't turn back, and I got to go forward. And the journey seems daunting, but I guess you got to keep going.
Now, is that something that you always wanted to do, or just came up?
I always wanted to write a well, I don't know about always. For a long time, I wanted to write a book. Yes, for a lot of reasons. I mean, I like to after I'm gone, I'd like to say I've contributed something. Not that it's going to be, some masterpiece that people are quoting for forever, but, contribute something beside my kids. Just build on the intellectual lattice that we have as a society. So yeah, it's something I want to do for a while.
Good for you. No doubt about it's coming to fruition. So I look forward to reading a copy when you're done.
Yeah, definitely.
Now, I know you said early on your mom had an impact on you getting into this field, teaching you a little bit about the markets itself. But did you have a mentor in the business, or what was that defining moment where you said, I'm definitely doing this going forward?
Well, I don't know that I had a mentor. I did read a decent amount of Warren Buffett when I was a kid in high school. One Den of Thieves was also like kind of an important book for me that got me interested in the markets. I thought it was interesting. It kind of goes through the bad things that some of the players did, but then the SEC, kind of like the good guys chasing them down. I thought that was all pretty interesting. But I would say, the closest person I have to like kind of intellectual mentor is Michael Mauboussin, who actually lives in the same town as me now, and we work together at Credit Suisse. And I don't know if your listeners know him, but he's like a phenomenal intellect. He's written many books and teaches at Columbia, and is just really smart guy with respect to finance and the markets.
Okay. Pretty neat. And especially, so not necessarily a mentor, but someone that you've learned a lot off of or learned from.
Yeah, yeah, he was a strategist. More like kind of the firm had two strategists, and I worked for this early in my career, and I guess the early 2000s, and I worked for the chief strategist and a couple of them, one by the name of Tom Galvin, and who also taught me a lot, and another guy. But Michael was also a strategist at the time, just little focus less on like market target prices, for the market and stuff like that, and more on kind of frameworks for thinking about investing.
Okay. Then
Yeah.
you joined Alger in, was it 2015?
Yep, 2015. So a little over 10 years ago, and there wasn't really a role like I have now at Alger. I kind of developed it, which is there was no strategist, there wasn't a lot of thought leadership being done, and we built out a huge library. I encourage your listeners, viewers to go to alger.com and slash insights. And there's a ton of stuff that we have there, to watch, read, listen to.
Okay. What attracted you to Alger originally?
Um, well, the growth focus was a big thing for me. I had worked in a lot of different types of asset managers, worked with some, very well-known investors, but they were always value or GARP, and I really I've always wanted to be more in technology. The closest I got was working in wireless telecom. I was an analyst back around 2000. And so I really like the growth aspect to it, and it has not disappointed. I've loved to be able to focus on innovation and growth, and I just think that the markets have structurally underpriced it for a long period. For the past 20 years, growth has outperformed value, which is not something that any academic thought would ever happen over that long period of time. So, and I mean, I could talk about this for a long time, but
Sure.
something structurally is very different in the markets now than it has been in decades past.
Okay. I know you often talk about innovation being, the engine of long-term equity returns. What does that mean in practical terms for investors?
Uh, well, the companies that are innovating are the companies that are gaining market share, gaining share in the economy, and companies, industry sectors that gain share in the economy ultimately gain share in the index, and that's really the way for investing wealth creation. But on a broader uh, perspective, the wealth creation in our economy is due to innovation. You think about how much wealth creation there has come from the fact, Moore's law. When Gordon Moore introduced his theory that the number of transistors on a chip would double every couple of years, it was only a theory. There was only 64 transistors back in 1965, and chips were, relative to today, they were very expensive and not powerful. And now, instead of 64 transistors, if you have a modern iPhone, you've got like 20 billion transistors, or an NVIDIA chip, you've got like 100 billion transistors. And that innovation that's happened in the computer processing part of the economy has revolutionized the economy and made it grow much faster, led to a lot of productivity, and productivity is ultimately what drives wealth creation. So the way I think about it is innovation drives productivity,
Yep.
productivity drives GDP, GDP drives sales for companies, sales drives earnings, and earnings drive stock prices. So that's the whole chain.
You made that sound so simple.
Well, it is simple from a big picture, I
It
guess.
is. Yes.
Figuring out what innovation is going to drive productivity and how it's going to contribute to GDP, and which companies are going to benefit the most. That's the difficult part.
That's a little more difficult. Exactly. But it's kind of crazy when you start thinking about it. Like you said, with the chips, 64 to now. I mean, it's unbelievable. How many?
It's unbelievable. It's very hard to fathom. In
To
fact,
think,
a lot of what I talk about simply is just how hard it is to fathom exponential growth rather than linear growth. I mean, we could do a whole podcast on that, and maybe we'll come
yeah.
back to it later. But it's the brain. I have a good story about this. If I don't know if you're ever interested or have time now or later, but the brain just doesn't think exponentially, and we're not wired to do it. But increasingly, we have to be, consider it more.
Yeah. That's very interesting. And to think about like the first supercomputer could fit in this room and wasn't even as smart as, our cell phone now.
Yeah,
It's just unbelievable how
it
fast
is.
technology has. I can't imagine, like, I look at let's say my grandfather and what he's seen from the time he was born to the time he passed away. And then now I'm thinking about like our 4-year-old foster daughter, what she's going to see in technology between now and when she passes.
Well, I mean, just to kind of maybe blow your mind a little bit, so why Moore's law was so fantastic, it was doubling every 24 months. AI is doubling its training, and many say its capability. Microsoft said recently that it's doubling its capability every 6 months, but it's certainly doubling its training every 6 months. So the amount of training is kind of the amount of compute and data that it's processes to become smarter. And there's a good relationship between how much it trains and how smart or capable it becomes. So that's doubling every 6 months. So I told you that humans aren't so good about thinking, exponentially. So if I tell you something's doubling every 6 months versus doubling every 24 months, it's faster. But I think you'd be surprised that a 6-inch plant doubling every 24 months grows 32 times or to 16 feet in a decade. That same 6-inch plant, if it was growing at the speed of AI, doubling every 6 months, would increase a millionfold or be 500,000 feet tall, which is into outer space. So it's the same 6-inch plant, instead of being 16 feet tall in a decade, grows into outer space at the speed of AI compared to the speed of Moore's law. So yeah, whatever our grandparents saw and our parents saw, that's nothing compared to what our kids will say.
Nah, that's unbelievable. And speaking of AI and how AI continues to reshape, industries from your perspective, I'm guessing in the innovation cycle of AI, we're still early on.
Very early on. There's a lot of ways to look at this, and well, first of all, just the amount of numbers of people in terms of adoption. There's only about 1 billion people around the world using AI on a weekly basis, and there's 5.5 people online. So there's just the penetration of using large language models is just still very small. Above and beyond that, the use of large language models, or generative AI, I should say, is really in its infancy. So, right now, when you use when you go to AI to ask something like "What's the capital of France?" It's you're using 10 times as much compute as you are when you do a Google search, and you type in "What's the capital of France?" and Google search pulls up like 10 blue links, and you click on one of the links, and you got to read through. In that web page somewhere, it tells you that the capital of France is Paris. That's how we used to do it, obviously, before ChatGPT came along. Um, Today, we just get an answer back that says the capital of France is Paris. Uh, that uses around 10 times, as I said, the amount of compute as a Google search. If you then say, plan a trip for me to France, rather than just asking a simple query, that's called a reasoning query. And the computer has to think about that for longer, particularly if you say, I have 3 kids and a wife, and this is when I want to go, and this is my budget, etc. That can use 100 or more, maybe even 1,000 times the amount of compute as that particular Google search. And then if you say, I'd like you to book the trip for me, which AI can actually do this now. It's called agentic AI. It can open up a browser, could go to a website and go on an airline's website and book the trip, the flight. It could book the hotel. It asks you for your credit card information. It kind of sends you these messages as it's doing it, but that probably uses thousands of times the amount of compute as one Google search. And then if you think about embodied AI, which is having AI in an actual physical form. So you think about your car driving you around, or maybe ultimately having, like Elon Musk says, the most popular, in his opinion, the most popular product in human history is going to be a robot in your house, like a domestic kind of robot.
That's
That maybe if you think about telling it to go find the laundry, take it out of the dryer, and fold it and put it where it has to go. The robot then has to think about, okay, what's laundry? Where's the dryer? How do I get to the dryer? How do I fold the clothes? Which clothes belongs to which person in the household? Where in the room do I put it? And we don't give that a second thought. But there's some papers to suggest that that uses 1 million times the amount of tokens, which is a kind of a unit of thought or compute as a single Google query. So not only have we just barely transitioned from a Google search to an AI query, but we're just in the infancy of using AI relative to how much we're going to use it in terms of the compute. So the compute's going to grow, a lot, and that's why we have to build all these data centers, et cetera.
Yeah, wow, that's pretty interesting what you just said. I mean, to think about that's where the future is going to be, and not too far away.
Yeah,
It's
yeah.
kind of crazy.
Yeah, I think we need to get the price of agentic AI right now is very expensive,
It is.
and it has to come down. But and it has to become more accurate. Can't hallucinate. If we're going to give it a credit card,
Yeah,
but
that's for
it,
sure.
it's going to get there. Embodied AI will take a lot longer. There's a lot more challenges with getting the robot to walk around and be able
Yes.
to do stuff, and also make it cheap enough for an average person to afford it. But no doubt that it's following all these curves, and over the next decade or so, we'll see that.
Yeah, that just blows me away. Now, what would you say for those investors out there that are telling themselves, and I'm talking about self investors, so someone who's not using an advisor or someone like yourself, right? Or using any of Alger's portfolios, thinking to themselves, well, with AI, can I just go into Chat GPT and have them do the financial planning for me?
Well, I mean, as far as so my our business, which is picking stocks, that is really, and I imagine financial planning is as well. There's a lot of behavioral aspects to that, and I think ChatGPT probably knows some of those theories, but you have to, for instance, picking stocks, for every buyer and seller, there's a human buyer and seller, and so um, it's difficult for a computer to take on that project, and it's also I don't think that the large language models are able to think through that kind of long-term thinking and come to the same conclusions as humans are, at least in our experience. But we are using large language models more and more in our research to be able to understand well, who the competitors are, what the industry dynamic looks like, and even in some cases, bring in data sets that can help us model better. But if you ask a computer right now, large language model or generative AI, to model out a company, and forecast earnings, it's not going to be a good result.
Yeah, I agree. The whole human element, that's where it's lacking. And knowing, more about the client, specifically what they want out of life and, what they want their investments to do for them as well. They're not going to get that with AI, at least for right now. And I don't know if that human connection will, can ever be removed from the situation, especially when it comes to really getting down to know what they want out of life and then get the investments to, like I said, whether it's safety, income growth, but also what do I want out of life in general? 2 vacations a year, 5 vacations a year. Am I looking to take care of the grandkids? There's a lot more that goes into it than just picking stocks when it comes towards the financial planning side with AI itself.
Yeah, and well, I think AI will get better at knowing us. In fact, my opinion is AI will know us better than our parents know us at some point, because it will be listening to every single conversation, potentially have access to all our queries of what we're worried about, what we're excited about, etc. And it'll have a better memory. Right now, it doesn't have a great memory. So ultimately, I think it will be a good assistant. But I think the difference between AI and a human financial advisor is the ability to intervene, and the ability to relate. I don't know if you'll people will listen to AI as much in times when they really need hand-holding, support, etc. And I think a lot of what a financial advisor does is to keep the client on the right track, to keep them focused on what they need to be focused on, their long-term goals. And so AI, I think, may always have like a more of a passive
Mhm.
role in that rather than an active role. And so I think there'll probably always be room for a financial advisor type.
I could see that. Almost the advisor turning more into like a coach or a mentor in a
Right.
situation. Yeah, I could
Right.
see that. Now, what do investors most often get wrong about growth stocks, or innovation driven companies? What would you say?
Well, we were kind of starting to touch on this earlier. I think very big picture, most investors think you have to have some allocation of growth and some allocation of value. I see that the most sophisticated investors at institutions, and I see it pretty much with retail investors as well. I think that there is increasingly a case that something is wrong, structurally wrong with value. Like I said, it's underperformed for a long period of time. So if you looked at the value factor, so to speak, so that's the price to book characteristic or factor, that's had very poor performance over time, and that is the number one driver of how, like, Russell divides up growth and value stocks. There's kind of three big components, but the biggest one is price to book, and price to book value um, had outperformed for 98% or 99% of all the 10-year rolling periods up through 2009. And so value stocks had generally done well over long periods of time. Since 2010, the price to book value factor, the low price to book value factor, has underperformed the market in every single 10-year rolling period. So it went from always outperforming to always underperforming, essentially. And that means I think that there's been a big shift. And so it's unclear to me now. Well, it's clear to me that someone's whatever they thought, a couple of decades ago, the value allocation should be. I think it's pretty obvious it should be lower now. And it's not obvious that that it should be remotely evenly split. I think there's a good case to be made that growth stocks are better long-term performers now. And I think there's two large drivers. I don't know how much time we have to get into them, but just to summarize the two big drivers. One is the accelerating pace of innovation. So when you think about growth stocks, they are the beneficiaries of faster innovation, and value stocks are on the other side of that. We could talk more if you want. And the other big driver is more of a technical issue, which is that book value, and I mentioned how important that is for value stocks and the value indices. Book value no longer represents the actual net asset value of a company, so it's not reflective of earnings power anymore, because a lot of the current assets of modern companies are intangible and not reflected on the balance sheet. Like Google's search engine algorithm, for example, is not on its balance sheet at all, which is different than it used to be 20, 30, 40 years ago. So those two things, the accounting not keeping up with the changing nature of the economy and innovation accelerating, I think are driving growth to structurally outperform value over the past 20 years and likely drive that over the next 20 years.
Okay. So as you look ahead, what do you think the two or three biggest forces you believe will influence the markets in 2026?
2026,
Yep.
I think that the big drivers are AI converging with supportive economic policies
Okay.
to create a really large investment cycle. So, most of us, I think of GDP as being driven by consumer spending. Obviously, consumer spending is more than 2/3 of the economy, and so mostly economic growth is driven by how much growth there is in spending, consumer spending. This year, it's business spending, business investment has grown faster than consumer spending, and I think that'll be the case next year. So I think that'll be the big driver of growth, partly because of AI and what we talked about in terms of the need for generating more compute capacity, and economic policy, and that is trade policy, which is encouraging a lot of domestic manufacturing to be built out, fiscal policy, which has through the One Big Beautiful Bill introduced July 4th, introduced a lot of tax incentives to encourage building of business spending, and monetary policy, where we've lowered rates 175 basis points. Well, if they cut this week
Yep.
on Wednesday, and maybe more next year. And so when you put all those things together in terms of the policies with the innovation, I think you're getting a big capital spending cycle. And we see that already. We see $9 trillion, according to the White House, that's been committed in terms of companies and countries, foreign countries, building in the United States. And that's a huge number, because the annual fixed investment only runs about $4 trillion in our $30 trillion economy. So a $9 trillion backlog, so to speak, or pipeline would be a very big addition on top of the normal kind of run rate.
Yeah, no doubt about it. How about when you're talking about like innovation areas, AI, cloud, biotech, energy, automation, which ones are most compelling over the next few years?
Well, I think every conversation has to start with AI.
Yeah.
It's the biggest theme in our portfolios. It has been for several years, and driven our performance generally across our strategies. And I think it will be going forward. I think the nuance is to figure out how the winners, and who are going to be the winners, of course, and who are going to be the losers from AI. And what we try to do is we've invested all throughout the data center, and companies and industries that supply the data center with power, etc. But you have to figure out how the data center will evolve. We could go into examples of this, and who are going to be the winners from that. And then, who loses from AI? We think a lot of software companies, systems integrators will lose because there will be a lot more customized software. It'll be done. Software is writing software now.
Yeah.
So, AI is probably most productive and most used in the programming industry, software programming industry. And so, what used to take organizations with thousands of folks can now potentially be done by, a handful of people using AI. So we think that's very disruptive, and there's going to be significant losers there. So it's a fertile place for stock picking, and that's probably the driver of what we see most of the change coming in the next year or two.
And that's your guys' specialty.
Yeah.
Yeah. Well, over the next 12 or 24 months, what mindset or approach do you recommend for investors navigating the next, 12 to 24 months?
Well, I think I think you have to kind of I think you have to know what your long-term goals are and know what you believe in long term. So if you believe in AI, we've already lived through several hiccups with AI, whether it's with DeepSeek or just recently there was a pullback over concerns of being able to build certain data centers. There's going to be all sorts of concerns. We could talk about them if you want, but if you know that you're committed to that theme longer term, then you can understand those are buying opportunities, whether it's down 10% or 20% or even 30%. So you have to be comfortable and always have, I think, some dry powder. And you have to recognize when there is, a lot of bullish sentiment and when sentiment is bearish or neutral. And so I think not only does it make sense to think about having dry powder and what you're committed to in terms of investing, but it also makes sense to monitor kind of the overall sentiment environment so you can get a feel for it. Because I think there's a decent chance that sentiment could, I don't know, it could explode to the upside, and we could. I don't think we're in a bubble now. We could enter though a bubble over the next 12 months. And if we did, it's important, I think, to recognize when you're in that. But if you're invested for the long term, then I think you just keep dollar cost averaging, and I think that will take care of itself.
Okay. And you mentioned some of those concerns.
Well, what are the concerns around AI?
Yeah.
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 I think the largest concern is return on investment. We could talk about that. Another concern is the ability to build and construct what's needed. Another issue is the circularity or sustainability of the investments. Because what we're talking about, I don't think I said this yet. We're talking about an investment that's as large as essentially World War II when we talk about the AI investment. So in World War II, the U.S. spent about $300 billion in 1945 dollars mobilizing and fighting in World War II. Today, the estimates is spend about $10 trillion on AI globally. Maybe 5 or 6 trillion of that will be in the U.S. because the U.S. so far is the majority of the data centers. And 300 billion in 1945 dollars is about equal to $6 trillion today. So, and that 6 trillion, sorry, is a number from 2025 through 2030. So
Okay.
over the next 5 or 6 years, what we're talking about spending is roughly equivalent to, fighting in a world war. So it's a huge gargantuan effort. It's not just building some chips. It's not coding. It's moving a ton of, earth, steel, erecting these huge AI factories to churn out all this computing that I said we need. And in doing so, there's definitely risk in that not coming to fruition as fast as we would like, or maybe it won't be needed to that extent. So those are some of the issues. We're happy to talk about them if you want.
Yeah. That's a lot of money when you think about it, especially that's a good comparison. How much was spent on the war compared to how much is spent right now just on AI technology. It's unbelievable.
Yeah, there's nothing really has approached it in American history. The closest, not the build out of the highway system, not investing in atomic energy, but the closest thing was railroads because if we talk about $6 trillion over time. We're talking about getting up to something like annually 6% of GDP potentially, and that's about where the railroad investment got to.
Hmm.
But so we haven't seen it in over 100 years.
Yeah, that's unbelievable. Now, I know our clients are very familiar with the Alger Growth and Income Fund,
Mhm.
and they use that quite a bit. Any thoughts on the Growth and Income Fund?
Well, that one certainly has some AI in there. The driver of growth and income, or the thought process behind, is to try to find not only the companies that are paying dividends now, but the companies that are generating a lot of free cash flow that can pay dividends in the future. And so, there's a lot of the big cloud service providers, which are the utilities essentially of the future. You think about, who are the companies who pay big dividends now? Well, they're kind of like telephone companies, like AT&T, what have you. Um, but the utilities of the future are the ones that are going to be paying the big dividends, and so those are the cloud service providers that are providing AI as a service, and cloud and other cloud services. So those companies are in that growth and income. So it's set up not only to provide income now, but into the future.
Okay. Well, let's transition here before I let you leave. This podcast is called the LYBL podcast, Live Your Best Life podcast. And we reach out to, prospects and clients and have different people on, whether it's someone in the industry or someone outside of the industry, focusing on things that matter besides our investments, helping them live their best life, whether that's travel or health or anything else. But when you reflect on your personal life and think your professional life as well, what values guide how you think and make decisions personally and professionally?
Well, I think I'd say, uh, well, certainly family has always been a guiding, light for me in terms of, how I prioritize things. But outside of that, I think intellectual learning. I've been a lifelong learner, so everything I do, I hope makes me kind of better, and increases my knowledge and my capabilities. And to that end, I think the thing I think about the most these days is productivity. I really like to be productive. I think I mentioned earlier, I'm not someone who loves sitting on the beach. I think maybe I'm wired differently than some folks. I don't relaxing and having a good time is fine, but like only in small doses. I'm more at home, more content if I'm getting something done, like working, writing my book, working with my kids on their school work or their tennis game or something like that. So really, kind of everything that I'm doing revolves around being productive.
Yeah, I could definitely see that in you. Now, is your wife the same way, or are you guys different?
Um, I think well, with respect to the children, she drives them, I would say, as hard or harder than I do. She really wants the best for them, and encourages them to get the most out of themselves, in a better way than I could, or more strongly than I could. Um, uh, yes, I mean, and that is really her work. So she was a math teacher. Now
Okay.
she's just uh, a stay-at-home mother, and so she's really focused on the kids.
So when you guys go on vacation, where do you guys go?
Well, we've been one of the interesting learning trips that we went on recently, which had some relaxation, but I think we also learned a lot. Was we went to the Galapagos,
Okay.
which was pretty cool.
Yes.
We went on this kind of cruise, and on a smallish boat. Not a giant like Carnival cruise, so think smaller than that. But every night you go to sleep, the boat moves, and you wake up in a different island. The cool thing about the Galapagos is that every single island is completely different than the other one. Some of the animals are only found in the world on that island. The environment's totally different. Some have black beaches, some have red beaches. So it was pretty fascinating. So that was kind of like mixed a little bit of science and learning
Okay.
with some beautiful scenery and relaxation. So I think that would be like kind of the prototypical type. Sure.
Yeah, I know I have not been there, but it's a place that's on my bucket list that I have to go see. So it's pretty interesting because I didn't know that about some animals are on one island and might not be on the others, and as well as the beaches are different there. So that's pretty interesting.
Yeah, I mean that's what I think attracted Darwin, because he was looking at these
Yep.
different islands, and he was saying, well, did some of the animals adapt to these islands, so like there are there are lizards that are black on certain of the islands because they had to adapt to the black because it was created by volcanoes, so they had to adapt to that, blend into that scenery, whereas not they didn't have to blend in, when the beach was a different color. And so
Yeah.
you see all these kind of adaptations, and obviously Darwin was thinking, well, why are these animals different? And that led to the theory of natural selection.
So you're able to go enjoy vacation, but also come away learning some things.
Yeah,
I
my
could
kids
see
might have
that's the
complained a
vacation,
little bit about the learning, but they have fun.
right? Now, every successful person faces pivotal moments in their life. What's a challenge maybe that you might have faced that ultimately helped you grow or change your perspective in a way?
Um, well, I think the passing of my parents was probably the greatest personal challenge I've had. It kind of refocused. Well, I wouldn't say refocused. It focused me for the first time on longevity very intensely. They both died of cancer, at different times, but I'm pretty focused on understanding some of the biomarkers for cancer, and that changed how I live. And I started wearing a continuous glucose monitor just for fun, and monitored to change my diet, and lost a lot of weight. So that was all coincidentally 10 years ago, about when I joined Alger. So that was kind of the biggest like structural change, I think, in my life. And having kids, I think, also
Sure.
set me apart from, I was for a long time an investor, getting my hands dirty, picking stocks. The thing I always liked the best, though, was kind of writing about, and talking to clients about the bigger picture of the economy and technology, and that stuff. And so a little after having kids, I decided, I really should do what I want, rather than pursue some other kind of materialistic goal. So, those two things, I think, are probably the biggest drivers, turning points in my life.
Yeah, I couldn't agree more. Especially having children completely reshapes your way of thinking. And then when you lose someone that's close, especially our parents or spouse or anything like that has impacts on our life that you get you to realize what's really important out of life, and do something because you love it, not because or because you want to and you love it, not because you have to. And just really, you realize can't take life for granted. And
Yeah,
you only get one
yeah,
chance. I always tell my kids every morning, when you wake up, you get to choose whether you're happy or sad. That's your choice. So, if you want to do something in life, man, nothing's stopping you. Just go do it. Life's
yeah.
too short not to enjoy it and get the most out of it.
Yeah, I couldn't agree more. And you don't have to work at a job you love. And I'm fortunate that I love my job, and it doesn't feel like work to me, which has the double benefit of not only making me happy, but also, I think, making me good at it, because it's hard to compete with someone who's, working around the clock just because, they're having fun.
Yeah, I agree. Now, what makes a career not just successful to you, but meaningful? Man, it could be
Um,
just like what you said because you love what you do.
I think part of it has to do with loving what you do. I think part of it has to do with your values aligning. So I think it was Charlie Munger who said, "Don't sell anything that you yourself wouldn't buy." So to be content and for it to be meaningful, it has to kind of align with your values. You have to enjoy it, and then I think it's also nice to contribute a little bit. If you can, for me, I like to help people learn. If I wasn't doing this, I'd probably be a teacher, particularly if it paid better, which it should. Um, but so I think helping others is also a nice goal, and it helps make it meaningful.
And I agree. Teachers definitely need to be paid more for sure.
Yeah.
Now, before we end it, one of our signature questions that we always ask people, especially on the LYBL podcast, is, what does living your best life mean to you personally? And how do you try to live your best life every day?
So I just had my 20 or no my 30th high school reunion, and hard to believe it's 30. And in my yearbook, I only had one quote, which was the best uh, being, or something like, being successful in life is to be able to spend your time in your own way. And I still kind of think that is the best definition for me about living your best life. You don't you want to try to minimize, while all relationships and a lot of life involves compromise, as anyone who's been around for a while knows.
Yes.
I think you want to try to minimize compromise, because if you have to compromise all the time, it just means that, you're not happy with, the setup. So compromise, of course, is essential, but too much compromise means that you're doing something wrong, I think. And so, if you have to compromise too much and, what you're doing for work or what you're doing in a relationship, then it's bad. And so for me, feel like living my best life is having my work and my personal life aligned with what I want to do. So, whether it's a Saturday or a Tuesday, I'm happy. I don't like, I remember I've had a lot of jobs and been in life where, I dreaded Sunday night was terrible because I hated Monday, or, unfortunately I've never been in this position, but I imagine there's some people who, their work is pleasurable and then their family life is not. So, but I could see it. I could see, weekends or weekdays being disconnected. But, I think living your best life is to, be aligned and, enjoy, all parts of your life.
That was a very wise quote from you back in high school.
Yeah, I got it right, surprisingly.
Yeah, that was awesome, and it's true. Obviously we're married, so we have to have some compromise.
Yeah.
But too much compromise, like you said, and then it takes you away from doing the things that you really want to do, and really what is you. So we appreciate you being on the podcast today. And do you want to tell people how to, besides coming to like us to find out more information about Alger? Is there anything you want to plug for Alger itself?
I think I mentioned earlier, so alger.com has a great website, alger.com, and there's a button you can press, you'll see, called Insights. And if you go to Insights, you'll see just a lot of different videos and papers and stuff to keep you busy and learning, and hopefully, enrich your perspective on investing. So I think that's probably the best way. And Alger has a lot of strategies, that invest in all the AI themes that we talked about. There's an ETF that invests solely in AI called Alger Enablers, AI Enablers and Adopters ETF, which is ALAI is the ticker. So, check that out. But, a lot of great strategies.
Well, we appreciate you being on the podcast today and getting a better chance to know who you are personally, as well as what you do and what you enjoy to do in life. And thank you for being a part of today's podcast. We appreciate it.
Thanks for having me. Appreciate it.
All right. Thanks, Brad. Thanks for tuning in. If this episode sparked something in you or made you realize it's time to stop guessing and start planning, we'd love to meet with you. No matter where you are, no matter when you start, you deserve to live your best life. We'd love for you to like, subscribe, and share this podcast with your friends and your family. Remember, living your best life isn't a destination, it's a decision. And it's a decision that you get to choose. Until next time, stay well, stay informed, and keep living boldly.